Bitcoin is a digital currency that is not tied to any country's central bank or government. It uses peer-to-peer technology to operate with no central authority manipulations. Bitcoin's supply is autonomous through computer networks backed by powerful blockchain algorithms which accurately confirms every transaction being made on the blockchain network. Bitcoin can be used to buy goods and services, trade for other currencies, or be saved. Bitcoin has been in circulation since 2010 and has grown in value to date. Anyone can invest in Bitcoin by buying Bitcoin directly from another person through a Bitcoin exchange platform or by buying shares of an exchange-traded fund like Grayscale Bitcoin Trust. Bitcoin is the first decentralized digital currency, which was designed by an unknown person or believed to be a group of people under the name Satoshi Nakamoto. Bitcoin's introduction was around late 2008, just after the global economic meltdown, which had affected the economies of all countries badly. As a result of this economic meltdown, people started questioning the effectiveness of conventional money and the role of government in money circulation. Bitcoin promoters seized the moment and started popularizing crypto as the best alternative to solve such problems. Bitcoin has since grown to be one of the most popular cryptocurrencies on the market with a current value of over $20,000 per coin. The first major Bitcoin buy was completed in 2011 when a Florida software developer named Laszlo Hanyuch traded 10,000 Bitcoins for 2 pizzas worth about $25 at today's prices. Conventional money circulation is premised on government control and the central bank. These entities influence the supply of money in the economy. Conventional monetary policy involves a set of instruments and strategies to control the money supply through economic policies. Conventional monetary policy is structured around 3 main concepts: open market operations, standing facilities, and minimum reserves. The central bank is in almost all countries except North Korea, Iran, and Libya. A central bank has a monopoly on creating and issuing new money. After the end of World War II, the new global financial system implemented by the Allied forces adopted the US dollar as the reserve currency for all central banks in the world. This means that all the remaining currencies worldwide are backed by the US dollar. The direct implication of this is that the circulation of the dollar in the US economy directly affects the circulation of money in other countries too. Due to this policy, central bank systems have been unpopular in many countries and have been associated with wealth inequalities in society. The people at the top of the society accumulated astronomical wealth, while those at the bottom languished in poverty. They have also been associated with high inflation rates in the economy and the global economic meltdowns. These problems ignited the rethinking of the conventional money policies, leading to the invention of Bitcoin and other cryptocurrencies. Bitcoin is a digital currency that is not issued by any central bank or government entity. It uses peer-to-peer technology, blockchain, to operate with no central authority or banks managing transactions. Bitcoins are managed by software. Bitcoins have a finite supply, only 21 million ever created, and they can be divided up and traded just like traditional currencies. Bitcoin being a decentralized currency with no central bank or government controls and being capped at 21 million bitcoins, there is always a limited supply of bitcoins. This basically means that as more people adopt Bitcoin as a form of currency, its value will continue to increase exponentially. How does a Bitcoin transaction work? A Bitcoin transaction works by sending coins from one wallet to another. This could be an online wallet or an offline paper wallet. Each wallet contains a unique address, which is where the bitcoins are sent when completing a transaction. The receiving wallet can then send those received bitcoins back to another address in their own wallet, or they can send it back to the address they originally received the bitcoin from. If you receive bitcoin into your wallet and then send them somewhere else, it will be outside of your control, and whether or not those bitcoins reach the receiving wallet or are stolen by a hacker and they don't reach the intended owner, they can't be taken back. However, the transactions within the blockchain are encrypted and the process is autonomous and very secure. How do I get bitcoins? There are many ways to acquire bitcoins, such as buying from a friend or an online service, selling goods for bitcoins online, allowing bitcoin for online payments, storing bitcoins in a digital wallet on one's computer or mobile device, and many other ways are being innovated as we speak. Bitcoin is a cryptocurrency, which means that it is a digital asset that can be used as a medium of exchange with the help of the internet. Bitcoin trading platforms are the stock market for bitcoins. They allow you to buy and sell bitcoins without the need for a traditional stock market broker. The most popular Bitcoin trading platform for beginners and expert traders is Coinbase, which is a digital wallet that allows you to store your bitcoins. It also lets you make purchases with Bitcoin and accept Bitcoin as payment. Check out the links below to help you set up your first investment platform for Bitcoin. Your first step to financial freedom. Coinbase has a mobile app that makes it easy to buy, sell, and store your cryptocurrency on the go. The app also lets you trade Bitcoin from anywhere in the world. Other Bitcoin trading platforms include Gemini, Kraken, Local Bitcoins, Cash App, Bisq, and Binance. We will explore one of these platforms in our next video. Just like any other business, there are risks associated with trading in Bitcoin and other cryptocurrencies. Bitcoin trading risks are associated with the volatility in the price of Bitcoin. The price is determined by supply and demand, but because it's not backed by any government, there is no way to control supply or demand. Bitcoin trading is frequently performed in any of the digital currency exchanges. This creates a larger market for traders, leading to large transactions from crypto exchanges with each other in a short time. This drives up the frequency of price fluctuations. Traders can mitigate crypto exchange fluctuations by trading on an exchange. When you sell your cryptocurrency on an exchange, you agree to sell it for US dollars at a fixed price that is pre-agreed upon by both parties. Other risks include hacking, fraud, and market manipulation. Bitcoin trading platforms can also help traders protect their assets from theft by keeping them in a digital wallet. In addition, most trading platforms offer margin trades which can mitigate the risks involved with shorting Bitcoin and other cryptocurrencies. A list of Bitcoin exchanges is maintained at bitcoin.org. Within that list, those exchanges that are available in the country and have clear licensing are highlighted or labeled as licensed. For investors who want stability, new innovative products are being launched by these trading platforms. Coinbase has launched a new non-voting share class called XBT. XBT is an alternative ticker symbol, name, for BTC. BTC is an abbreviation for Bitcoin, adopted when it was introduced into the stock market exchange. An investor is now able to invest in Bitcoin without worrying about the volatility of Bitcoin, as the security is assured by the trading platform. Unlike traditional brokerage firms, crypto exchanges are not members of the Securities Investor Protection Corporation, SIPC. Your cryptocurrency is protected by the Security Council and can't be liquidated. Exchange custodian protection plans are the easiest way to keep your portfolio safe from fraud, theft, or other loopholes. Bitcoin, just like gold, can also be mined. New Bitcoins can be generated through a process called Bitcoin mining. This process has become more complex and time-consuming in recent years due to the improvements in specialized hardware for Bitcoin mining. Blockchain is a technology in which blocks are linked together to form a chain. It allows everyone involved in a transaction to see that it was valid and was processed by the network. Everyone can trust this information because Bitcoin nodes use the blockchain to identify legitimate transactions from a respend attempt. So, no one can change it. The initial Bitcoin investors were the ones who bought Bitcoin when it was still a new currency. They saw how valuable it could be and invested in it. The Winklevoss twins, Tyler and Cameron, are the most well-known investors in Bitcoin. They invested $11 million worth of Bitcoins into the currency when the first started. Mark Andreessen, who is known for his work on Netscape Communications Corporation, Andreessen Horowitz invested $20 million into Bitcoin. Venture capitalist Tim Draper and PayPal founder Peter Thiel both invested upwards of $20 million each into the currency. Other investors include Roger Ver, Gavin Anderson, John Matinis, and Mike Hearn. Bitcoin is becoming more popular due to its lower transaction fees, increased privacy, and non-interference of third parties. Several online retailers are now accepting Bitcoin as payment for their products and services. Some of the most notable names include Microsoft, Dell, Newegg, Overstock, and Expedia. The latter two accept Bitcoin as payment for hotel bookings. Peter Thiel, a co-founder of PayPal, said that Bitcoin is a real innovation, and in early 2014 even went so far as to say that Bitcoin's business was worth more than the whole banking system. As Bitcoin and blockchain technology is gaining mass acceptance, governments and regulators have to step up their game to understand the technology. This year has seen a huge increase in countries making strides with their efforts to regulate the industry, especially after a wave of negative news coverage. Bitcoin is one of the oldest and most popular cryptocurrencies in existence. For newbies venturing into cryptocurrency, they might want to start with the easiest options like buying a coin on Coinbase. If you are considering investing in Bitcoin, consider the benefits and risks first. It's been a rocky start to the year for Bitcoin, but experts still say it will hit $100,000 and that it's more a matter of when and not if. A senior Bitcoin expert in the US noted that Bitcoin remains anchored at around the $20,000 level and won't break out until Wall Street is confident a broader slowdown is not happening. Despite recent volatility, many experts believe that Bitcoin will pass the $100,000 mark in the future. It's difficult to predict exactly when this will happen, and opinions are divided on this. A recent study by a key German bank showed that about a quarter of Bitcoin investors think it will happen within the next year, whereas just 18% believe it'll be worth more than $500K in 5 years. 6 tips on how to wisely invest in Bitcoin. Have a well-defined strategy for crypto trading. Crypto investment scams are on the rise, hence proper due diligence is required before investing. Manage risk. Learn from other experienced investors and crypto traders' mistakes. Diversify your crypto portfolio. Don't invest in only one cryptocurrency. Spread the investment in several digital currencies. Automate purchases. This enables the investor to take advantage of pound cost averaging. Being in it for the long term, the projected increase in value in the long time could give good returns as opposed to the day-to-day volatility. Avoid the common crypto mistakes. Buying because the price is low. Assumption that investing in cryptocurrency is easy. Deceit by scams. Investing in fake coins. Falling for hackers. Disclaimer: this video is purely from a layman's perspective and is not professional financial advice, and neither am I an economist. The content shared herein is only for informational purposes. Investment advice should be solicited from the right experts, broker, financial practitioners.
Before you leave, our team will be very happy if you can give this video a thumbs up. Remember to subscribe and click the notification bell so that you can be notified every time we upload a new video. Thank you for watching and see you in the next video.